Well, welcome back, everyone. What a great start to the week, right on point with our strategies. We pegged the market into the end of last week to have enough momentum to potentially rise to start today's trade, and you're looking at the SPY right now, the S&P 500 ETF, our swing barometer. And what do we see from there? Well, we pumped up to a high, pulled back. We didn't really break and close below the center of the weekly pivot lines, but we did end up having a negative close vis-a-vis last Thursday. Now, not a huge surprise, but the momentum carry forward from the end of last week took us a little higher. A pullback that did not break the market and left us in a support zone is looking like a consolidation pattern, a dip that may potentially become a bounce and perhaps take us up higher. And also linked to the dollar, which is currently on a dramatic rise, as you can see, trying to get to the top of that trend channel where we see it likely topping out or at least pausing. And this may correlate to the data that comes out between Tuesday and Wednesday, the ISM services data, where competition may force prices down, and we may see, the growth number not come in as great, and potentially the prices paid not as great. Now, today we got the opposite on the hard goods side. Bottom line is the dollar's rampage up puts a little bit of a wrench in the engine on the precious metal miner move, but it hasn't broken the move overall, and the potential upside after the dollar completes its rise, which would probably be corresponding to the market completing a move down where we don't see dramatic downside risk. Mathematically, 515 is a risk level, the bottom of this channel, 514 and 80 pennies, but potentially not much more than that 519 to 518 area, presents, offering the opportunity for a dip and then a bounce, corresponding with the dollar coming down. And today, we got a really good eyeful of that. What you're looking at right now is the ES, not the SPY, on a 3 time frame basis, a weekly, a daily, and a 4-hour. Now, what we know is that it's still a very bullish market. There's no question about that. Price is still up on the weekly. Breakout forecasters presented so far. And when we take a look at the daily, we did get a negative divergence, negative momentum shift locked in, but we're still in a buy signal state using the Champion Trend Pack Toolkit. The 4-hour chart, however, lost its buy signals and is presenting with early marketplace signals developed by Rob Hoffman, the TRP toolkit, the ITP toolkit, and we also have a triple S down triangle there supporting, hey, there may actually still be some downside risk here that needs to be cleaned off the deck, taking us down to that 52-51-ish area as a target 1, or potentially, to that midline target, which we see frequently present before the market's done its pullback to refuel. Now, a pullback to 52.51 on the ES effectively takes us down in the territory for the SPX, the index itself, to the 5,200 area flat. It takes us down and puts us in that territory on a weekly chart where I'm going to try to zoom in on this, where you can see that blue speed line over there. That's the fast speed line, effectively testing a fast speed line or just slightly above. On a daily chart, that 52-51-ish area, takes us down into the territory of the champion cross buy zone. And of course, we'd be looking for a rise that could then take us above. It also puts us very close to that last breakout forecaster there on the daily chart. Now, that 4-hour chart does have that negative signal, but it does not mean the market's in a negative state. So the strategies that I'm using are intraday until I've got clearance from the dollar giving me a top and the market telling me it can get and hold above a key threshold. And for me, that key threshold is the center of this uptrend channel that really goes back to the beginning of this move overall, the beginning of November of 2023. Now, for 2024, we've had some stellar performance. Market's up over 10%, almost 11% from the beginning of the year still. And yes, we did close lower than Friday, but we're still in fine shape. Getting above the center of that linear regression channel and getting the dollar in a signal state that tells me, hey, it's done its rise, at least for the week. Well, that would open the door for potential risk on activity in the market. And I'm looking for that as we move through the week. So I'm going to continue with day trading strategies. I got to do a little bit of trading in front of active trader room members. Not all of this was done in front of them. And it's a small amount, one contract trading, 325 gross profit. can't guarantee that results happen all the time. But when I follow the rules using the tools that I'm going to be teaching you all about in the upcoming Wealth 365 Summit, I tend to do better than not. So let me invite you to the Wealth 365 Summit that is coming up at the beginning of next week, less than 7 days away. Simply go to joinzed.com, get your seat, get all the goodies. We start Monday, April the 8th, and the strategies that I use for intraday trading, swing trading, the Champion Trend Pack Toolkit, the amazing signals that we get off of them and how to use them are going to be just a large part of what I'm going to be teaching you. And I've got a few sessions that I'm very much looking forward to sharing insight and exploring how I use powerful tools and strategies in my personal trading. Looking forward to seeing you there. Go to joinzed.com, get yourself registered, and thank you for watching. See you in the next video. Have a great rest of your day.